Snipers, you have to see what's happening to the cryptocurrency market today as the Bitcoin bulls are battling the bears right now for the $38,000 resistance level. And notice how we have confluence here with this symmetrical triangle for a potential breakout that would take Bitcoin back up to the 50-day moving average to retest the $50,000 level. I want to talk about what I'm expecting for Bitcoin if we were to see hourly and 4-hour confirmations of this breakout. And then we'll also talk about the downside scenario because once again, we are heading towards 70% of the apex of the symmetrical triangle, and that's typically when you'd like to see a breakout. And when you start to overextend into the apex, that starts to show signs of weakness. So we are at a very critical point. I had to make this update for you guys. And then when we look at what's happening to the total cryptocurrency market cap chart, notice how we're back above home base at the 20-week moving average. This is exactly what we've been talking about here on the Snipers channel, is the total cryptocurrency market cap chart telling us that we're going to potentially see a decoupling effect with altcoins and Bitcoin, because Bitcoin is showing a whole different storyline way and below this 20-week moving average. There was no weekly candles over the last 3 weeks to come and test this 20-week moving average, and we are seeing this storyline translate into strength with Ethereum. Notice how on the daily chart, we are coming up, forming this potential area that we're going to see continued upside towards this 86,000 Satoshi level. We are testing the monthly open right now at that 74,000 Satoshi area. And in my opinion, as long as this Ethereum to Bitcoin chart stays above 65,000 Satoshis, the likelihood of the Ethereum to US dollar price coming back up to test 3,500 US dollars becomes extremely high. And notice how Ethereum to the US dollar price is having a cup of coffee in between two major moving averages, the 50 period and the 100 period. And that's exactly what we're seeing with others' dominance. You can see right in between the 50 period and 100 period moving average. A lot of analysts are saying that altcoin season is over, but you all know that are tuned into the Snipers channel. My thesis stands true that as long as we're above home base here at the 20-week moving average for others' dominance, in my opinion, there is still a very high potential that we're going to see strength with altcoins, but that doesn't mean we'll see strength with Bitcoin, because Bitcoin dominance is still showing signs of weakness, like it wants to continue further down. A lot of analysts were saying, oh, well, after we saw this bullish engulfing, that's it. Bitcoin is going to become way more dominant. Altcoin season is over. Well, look what's happening now. The chart is continuing to see downside pressure, and the reason I look at the chart with an unbiased perspective as an umpire is because as much as it's nice to see Bitcoin dominate in the market, we have to just look at the facts. And the fact is we are way in below this 20-week moving average with Bitcoin dominance. And so something is developing right now in the markets. In my opinion, it's looking like there could be some decoupling effects happening with Bitcoin and altcoins. We'll look at traditional markets and precious metals later in the video, like we always do, and talk about how that's also going to affect the cryptocurrency market, because that environment being calm and relaxed is always a good thing for the crypto market to continue to price discovery. So there are a lot of puzzle pieces on the table today, midweek. You guys are watching the Snipers channel. My name is Naeem Al-Abeidi. Remember to smash the like button for the YouTube algorithm. Let's hit 500 likes on this video. First, I want to talk about what's happening to Bitcoin, as we always do. We're going to start on the daily time frame. And at this point, we are inside of this pattern where if we start to see Bitcoin come above that 38,000 level and start closing hourly and 4-hour candles above this market structural resistance, that's a confirmation that we're most likely going to see the full schematics of this triangle play out over the next week. And that would take Bitcoin back up to retest this 50 period moving average and the 100 period moving average around that $50,000 big even. Now, understand that we've yet to get a confirmation of this breakout. So in order for us to ensure we're not going to get trapped, and frustrated with this trade, we have to wait for a confirmation. If we start to see this trend back below that $36,500 level, we now have the monthly open here sitting at 37,400 and the weekly open at 35,500. We don't want to get below 36,500 because that opens the door to retest this weekly open. And when we come to the lower end of this range, the likelihood of us coming back to this previous weekly open at 34,600 becomes a lot higher. And when we go into the smaller time frame, where everything starts to morph into the larger time frames. Notice how right now we have yet to get the confirmation of Bitcoin's price action breaking out of this triangle, but we are starting to overextend inside of this formation where we typically want to see a breakout by 70% of the price action heading into the apex, which is the end of the triangle. We really need to see Bitcoin come and break through that $38,000 level with volume, or else we're going to follow the path of least resistance when there's low volume, which is always going to be sideways to a little bit higher, but we don't want to continue sideways in this lower range. We want to see one more push and momentum to the upside so that we could see the rescue operation fully complete and get ourselves above the $41,000 level where we have this 200-day moving average. And of course, if we get above that for Bitcoin, that is the full confirmation that the rescue operation is complete. But having a cup of coffee here, we have to be careful. We've yet to form further lows. So far, it's only been higher lows. That's a positive thing, and that tells me that the rescue operation is still intact. If we start to come down and break this $35,000 level, that's when I would say it's the final draw, as I've always mentioned, especially right now that we have this market structural support level. We didn't have this level prior, and this wasn't as significant, but now there's so much price action towards this apex, and this is such a tight range that that $35,000 level is now very significant. And so that previous weekly open also showing confluence there. We don't want that door to open because that assumes 24,000. So that's the scenario for Bitcoin. Now, as an umpire, let's say we do see this breakout at 38,000. We start to see Bitcoin come back above this 200-day moving average at 41,500. Does that mean Bitcoin is the best asset to be in? Well, I'd like to question that. When we look at the Ethereum chart, notice how in the US dollar value, you can see we're back inside of this fair market value range. Inside of this channel, there's a reason these daily candles closed both of their bodies so far above this channel. Every time we've come below, it's been a good opportunity to long. At this point, because we're above 2,700, and you can see that's really exactly where this monthly open is sitting, that makes me assume that we're going to see continued upside for Ethereum. And if Bitcoin stays sideways, sticks with low volume, or starts to break out, those are all environments to allow Ethereum to see continued upside, because the Ethereum to Bitcoin chart is what's going to drive the momentum for Ethereum. And so the fact is, we're looking like we want to break out. We've already broken this major structural resistance. We're testing the monthly open. 86,000 Satoshis is the next target here. And so when we compare that and translate that to US dollar value, it's about 18%. That would assume that Ethereum would come up and start to get close to that $3,500 level. Around that $3,200 area is what the correlation would be when we look at the Ethereum to Bitcoin chart and the amount of space here. But realize that these major levels will always act as a magnet. So if we see price action come all the way here, this will most likely magnet or at least wick towards that $3,500 level. The exact number is 3454 for those that listen to our podcast. So is Ethereum going to see more strength than Bitcoin? It still looks like it. Are other altcoins going to do well? I think the fundamentally sound ones are. Others' dominance showing very nice price action between these two major moving averages, very similar to what the Ethereum to US dollar price is doing inside of the 50-day and 100-day moving average range. So that's very different than what's happening to Bitcoin fully below this 200-day moving average. We have to isolate the two charts when there starts to become a separation. And so as much as the 2017-18 cycle taught us that Bitcoin does control the market, we have to look at this market in a different way. We've already went through the innovator and early adopter phase. A lot of people are saying we're still in early adoption, but institutions understand this market. They understand the fundamentals. That's why we're seeing Binance Coin in the top 5, Ethereum in the top 5, Cardano in the top 5. The fundamentally sound ones will always deliver positive ROI over the long term. So keep that in mind when we're looking at altcoins, because so far the print looks like Bitcoin dominance wants to continue further down. That's not a bad thing for Bitcoin. Bitcoin's price can still go up with Bitcoin dominance going down. It just means altcoins might be the better play. And so let's look at the environment outside of Bitcoin, because that does influence the cryptocurrency market. Of course, traditional markets right now, it looks like institutions are hedging into precious metals, with gold continuing to see a breakout coming up, wanting to test this $2,000 big even. That's going to be an interesting play, because when we look at the gold to Bitcoin chart, notice here how we have this cup and handle formation, and we're starting to really get tight inside of this range where it looks like this handle really wants to start forming. And if we start to see this push to the upside, we're coming up to test this 2017 area of the gold to Bitcoin chart. And that's going to be a very interesting chart to watch as we start to see what gold wants to do. And of course, silver, you can see also translating, showing strength here above the monthly and weekly open. Here's really what matters though with the traditional markets. The DXY, you can see we continue to wick up here, and that is not a good thing for traditional markets because it creates indecision. That's why the S&P 500 has yet to decide whether it wants to form a higher low or a higher high or a lower high, and so or continue to the upside. We're just kind of going sideways here at the monthly and weekly open because the DXY is undecided as well. We keep seeing these random moments where the DXY pushes up above the previous weekly open and weekly open, but we stay inside of this range. We just want to stay here if we want to have a healthy environment outside of the traditional markets and cryptocurrency markets. So far it's healthy, but we'll continue monitoring these wicks that just randomly come up, because if we start to see this push back up, that volatility could affect the markets. And usually there's an opposite correlation when there's volatility with the DXY. It's a very sensitive relationship. So a lot of interesting things happening in the market, but I think the one thing I'd like for each and every one of you snipers to take home is what's happening right now to the overall market against Bitcoin. And should we be isolating the two charts? Should we be isolating altcoins away from Bitcoin this cycle? Of course, with Bitcoin, if it does start to see weakness and further downside, then that could affect the overall market. But has Bitcoin seen the worst of it? And are we going to see institutions start hedging into altcoins, as those that watched my Charles Hoskinson interview heard from the lead quant at IOHK? He said institutions are gonna basket themselves into allocations of many altcoins to diversify their risk. And since that interview from December, we've seen altcoin season start in January, and we've seen an immense amount of strength for altcoins since the start of this year. Is the storyline changing? I'd love to hear your thoughts in the comments below. Of course, Bloomberg, they're saying that Bitcoin is an NFT, not a storage of value, because it went down 50%. Well, they don't know that for those that were in Bitcoin in 2017, we're up 500-600%. And so 50% is not a big deal in a bull cycle during price discovery after seeing massive gains. So still the best performing asset. Who cares what Bloomberg says? But with that, what's happening with the total market and Bitcoin? Should we be isolating the charts? I'd love to hear your thoughts in the comments below. That'll also enter you into a giveaway to win one of my favorite books on investing, Principles by Ray Dalio. Comment below, share this video, and we'll pick a winner for our video yesterday. Let's see. Justin Jarrell says, another great reflection of the current state of the crypto market. I'm really looking forward to see what happens in the coming days. Keep them coming. Send me a message on Instagram. The link is in the description below. And with that, I appreciate each and every one of you snipers. Let's hit 500 likes on this video. And until next time, snipers.